All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, Katie McGarrigle, Crypto Katie.
Crypto Katie, I like it.
Where do I start? Crypto, how you doing?
I'm great. I am stoked to be back after, unfortunately, a little bit of a voice thing on last Wednesday, but ready for episode 2. We covered some basics last week. We're going to do a little bit more today, and I'm ready to keep learning.
Awesome. Well, we'll jump right into it then, Katie. This is Where Do I Start? If you're just tuning in, new mini-series we've launched here on the Tasty Crypto Show, on Tasty Live, on YouTube. It's streaming. Get in the chat. Type something crazy. We're also live on X, formerly Twitter. You got to add that. Tasty Crypto X account, Tasty Crypto YouTube as well. So get in there. Jump in the chat. Yeah. Tell us what's up if you have a question.
Hang. Job stability for us too, you know? We need those engagement numbers up.
We do. Let's get those numbers up. As I used to say when I was doing the show with Victor a long time ago, we would say, instead of trying to get likes or subscribes, I'm up here on the stage dancing, so throw some dollars at me.
Yeah.
So hit that like button,
yes,
I suppose.
I'm here for it.
Well, where do I start? Crypto with Crypto Katie. Katie McGarrigle here on the show. Thanks again for coming back. This is episode 2. So make sure to go and check out episode 1 if you missed it. If you did miss it, we talked a bit about, I would say, high level, the basics of crypto, tried to explain a couple different terms.
Yeah.
And then we got into Bitcoin, and we looked at it from the perspective of the technology.
Yeah.
What makes this value transfer layer on the internet so interesting? Today, I want to talk about it more from the investment perspective. We'll look at it objectively, what have returns been, how is it correlated, how volatile is it? But I also want to try to, well, the term is orange pill. I want to try to orange pill you, Katie.
Okay.
Yeah.
I'm curious.
This is like in the Matrix.
Yep.
Red pill, blue pill. Do you want to return to the Matrix or do you want to see the truth? We're going to try to get you to take the orange pill here on the show. I think we have a convincing argument, but point being, I want to walk through some of the reasons I think, and others do as well, why this is such a compelling investment. It has to do with some of the tech features that we talked about last time. But we're going to look at that in more detail here. We'll get into the macro a little bit. We'll look at performance as well and make the case for Bitcoin as an investment here on episode 2.
I like it. Yeah, I think this is the area that has been the biggest pitfall for probably a lot of people out there, right? Because again, it's not like a tangible thing. So we kind of talked about that last week as being like a hang up for some people to participate. But based on what I've very briefly seen in the slides you put together, you're about to convince me and probably a lot of other people out there why this is worth looking at.
Do you own any crypto today? I can't remember if you, or maybe you've.
I have nibbled like a couple $100 on BTC and ETH. Okay. And that is primarily due to the fact of having been grown up in the Tasty environment. The best way to learn is by getting a little skin in the game. At least that's the way we kind of talk about it here on the Tasty Live Network. So I felt like in order to really understand the price dynamics and to get further along in the journey, which I know you're also doing a new show with Mike and Nick as well, to get to something like that where I'm looking at even more coins or ways of participating, I needed to at least understand a couple of the most popular and what pushes and pulls them and when.
Okay, so you got started though just to kind of get a taste of this. I'll have what they're having. Let me put some Bitcoin in the portfolio.
Just nibbles.
But you didn't come at it from the kind of investment thesis being this, and here's why I want some. So you're brand new to all of this. Mm-hmm. I'm sure you're going to have some questions. I encourage you to ask questions, and any questions here in the chat as well, let us know. But yeah, let's jump into it then. We'll come at this from the investment perspective.
Okay.
So quick refresher here on the series. Some of the topics that we're going to cover today, we're covering Bitcoin and more broadly crypto investing or investing in crypto. Previously, we talked about, as I mentioned, some of the technical features of Bitcoin. Today, we're going to look at it from that investment perspective. That said, just quickly going back to what we hit on in the first show, it is important to understand that a lot of these technical features are what make it an interesting or compelling investment. There's a bit of overlap here, especially when we look at something that's a scarce asset, a hard asset, if you will, limited supply. It's decentralized, it's digital, it's secure, it's transparent, et cetera, et cetera. Those are a lot of the reasons why it's also, in my opinion, a pretty compelling investment.
Right. And that was something that I think was a deterrent to a lot of people. We kind of talked about its, former uses on nefarious sites and things of that nature, but there's actually a lot more transparency that you get to see than in maybe traditional financial investments.
Yes, absolutely. And I think one of the easiest ways to, I suppose, start from the investment perspective is this digital gold analogy. Mm-hmm. Bitcoin and gold have a lot of the same financial characteristics. We'll talk about those in just a second, but that's probably the easiest or best place to start when you think about what is it that I'm investing in? Why am I investing? Not everybody invests in gold. I think Warren Buffett is famous for his stance against investing in gold. But for those that do invest in gold, there is a bit of a story or a narrative, and you'll find that there's a lot of the same reasons why you might be attracted to Bitcoin if, in fact, you're investing in gold for a variety of these reasons as well. But the most important one to me, there's two actually. The scarcity component.
Yeah.
Limited supply. If there was an unlimited amount, then what I'm going to say next really wouldn't be as relevant to Bitcoin as an investment. But just like gold, there's a finite amount. We know that the total supply of Bitcoin is capped at 21 million Bitcoin. We talked about how some of these are likely unrecoverable. Mm-hmm. So we're probably closer to 19, 20 million running up against that ceiling right now. But limited supply, limited amount of gold. Unless we start mining gold from asteroids, we have a limited amount here on Earth. So it's rare. But also, just as important, it's decentralized.
Right.
And that matters because it can't be manipulated by any single person, any government, any company. No one's really in control, which is a good thing. It might sound like a negative. But this then is an asset that not only is immune, and maybe immune isn't the correct term here, it's protected or insulated from some of the negative, I guess some of the negative outcomes in terms of monetary intervention, in terms of how currency is debased, your purchasing power declines, as a result of, say, printing money.
Sure.
Governments can't print Bitcoin.
Right. It levels the playing field a little bit more,
yes,
if you will.
Just like governments can't print gold.
Yeah.
A lot of central banks hold gold. A lot of governments hold gold. A lot of people, look at gold as a hedge against currency debasement, as a hedge against monetary policy, systemic risk to some extent in the financial system. And you get that to a degree with Bitcoin or digital gold from that perspective. So we're going to hit on, like gold, it's seen by many as a store of value. Mm-hmm. It is volatile, but still, we'll look at the returns. It's durable in that it's pretty hard to destroy the blockchain.
Can you destroy it, other than losing it?
I think the biggest threat to cryptocurrency is electromagnetic pulse.
Those solar flares and those electromagnetic pulses, my friend.
So if, clearly gold can survive if there's no electricity, has for a long time.
Right, but if the grid goes down,
Bitcoin doesn't survive without electricity or the internet or power sources. So there's an apocalyptic scenario where, who really cares? You probably just,
at that point,
you need some other supplies,
yeah,
I would argue.
We're all in an episode of Fallout after that.
Exactly. So it's durable. It's also portable. It's digital. It exists on the internet. You could carry your seed phrase with you in your mind, and you have access to this as a result. So it's portable. It's seen as a safe haven. There's been some research that's been done around this as kind of a hedge to geopolitical risk. Certainly, I think it's a hedge to inflation, as we'll talk about, and to maybe what you would refer to as monetary policy risk to some extent. I would also argue that it benefits from those things, which we'll take a look at in just a second. But again, these are a lot of the same reasons why you might invest in gold. And so if we start there and you look at this as digital gold because it has similar properties, it's maybe a little bit easier to understand from an investment perspective.
Yeah, makes sense.
So before we move on, any questions from you, my friend?
Not at this time. I think that is a very helpful analogy for somebody like me who does often trade not necessarily like spot gold, right? But gold futures options and the gold ETF and things of that nature.
Yes. This is a lot more volatile than gold. I think the annualized volatility in gold is probably somewhere, it's a little bit higher now, but somewhere just north of 10%, whereas the implied volatility in Bitcoin right now is closer to 60%.
Okay, so it's more than gold. I mean, silver's pretty volatile, but it's even more than that.
Yes.
Okay, as we will see.
But driven by many of the same things. So let's look at just a couple reasons why you might be interested in gold, digital gold, hard assets. I'll throw farmland out there, right? What this all has to do with is the fact that really since the great financial crisis, when we took interest rates to zero and we kind of deployed some policies, emergency monetary policies that, really we haven't used them that frequently. They are in response to a monetary crisis, financial crisis, which we experienced. But for a very long time, we kept that emergency policy in play. For the better part of a decade, the better part of almost 2 decades. And I think there's a lot of reasons for that. Clearly, we were no longer faced with a financial crisis. But when you look at just what's happened here, and we're looking at the Federal Reserve's balance sheet to start with. If you go all the way back to 2008, this was less than $1 trillion. It got all the way up to north of $8 trillion. It's at $6.4 trillion right now. You have quantitative tightening. There's a reduction in the balance sheet that's ongoing. But my argument here is that you've started something in this sense that you can't really ever stop. We'll have periods of quantitative tightening. We will have periods of quantitative easing. I believe that we will print again. And so this is kind of a one-way street. I think that the Fed's balance sheet's only going to continue to expand. That benefits asset prices. That benefits Apple stock. It benefits the price of Bitcoin, the price of gold. We've seen that over time. We've also seen government debt continue to climb. So at 35.5 trillion, it's not going down. And the rate at which it's growing is accelerating. And so I think that what you'll likely see are periods of time where maybe it's not directly as it has been in the past, but you'll see the Federal Reserve monetize some of that debt one way or the other. Balance sheet will likely grow. So these things are interconnected in a way. But I don't think 35.5 trillion is going to come down anytime soon. There's no signs of that. You also see ebbs and flows in money supply. But money supply is ticking up as well. You continue to see growth there. You need credit growth in the economy, not just here in the US, but globally. And so it's not necessarily a bad thing. But when you look at the rate of change or the growth of the money supply, there's a pretty strong argument then for digital gold or for gold or for assets. They're a benefit of more money in circulation. It finds its way, this liquidity does, into the financial system. And you look back at what happened over COVID, money supply globally increased by about 20%. It doesn't go up every single month or every single year. It does ebb and flow, but you can see a lot of these charts are up and to the right. Debt is growing. Federal Reserve's balance sheet is growing. Money supply is growing. What this largely all kind of feeds into is the debasement of the currency. This is priced in dollars. Now, obviously, dollars is a reserve currency, and other global currencies are arguably being debased as well. But this is a hedge against that. You also see that there's a pretty consistent theme of lower interest rates. You can see that period of time that I was talking about, 2010 on, up until recently, where we saw one of the fastest increases in rates in recent history. I think given the demographic picture of baby boomers retiring,
transfer of wealth,
but just arguably that like growth is slowing down, population growth is slowing down, at least in the United States. Debt is increasing. It's very unlikely that as you continue to increase the debt, we maintain interest rates at 5+%. I think interest rates come down, they probably stay closer to zero over time, just given the demographic picture on the other side of that and the debt picture. Because at a certain point, the coupon payments are pretty high that you have to make on all of that outstanding debt. And so, it's easier, obviously, to do that when the interest rates are much lower. So I think that you'll see that as well. But all reasons, if you believe that currency is going to continue to be debased, that you want to be in assets. And this asset tends to have some pretty good returns. So that's the backdrop that I want to point out. Now I want to look at this objectively, right? Because this is a scarce asset. The supply is growing, but post these different halving events, halving event occurs once every 4 years.
Okay.
So every 4 years, the amount of Bitcoin that's received as a reward for mining, let's say, the amount of supply growth that's occurring gets cut in half. So there's this disinflationary supply growth dynamic that's occurring over time. The current inflation rate for Bitcoin is 0.84%. But by the end of this decade, it'll be closer to 0.2%.
Okay, because of 2 more halvings, right?
Yes.
Or
Well, one more halving, but just looking at this chart in terms of how this is coming down. So if we just go to 2032,
I see.
about 0.2%.
Okay. Yeah.
So the supply is still growing, but at a much, much slower pace, and certainly at a slower pace than we're seeing the growth in money supply in most cases. So you have a disinflationary supply growth here, which supports the scarcity component. And in a way, you could think of it almost as becoming more scarce, or at least the growth rate of supply is decreasing over time in the face of government debt dynamics and monetary policy that supports the idea that, hey, maybe you want to own hard assets that can't be manipulated by some of these measures. So,
can I stop you right there?
Yeah.
So I know we're talking mostly about Bitcoin, and I'm not trying to jump the gun here by any means, but like, would you make this same argument for a different cryptocurrency, or are the dynamics and
It's a little bit
considerations
different.
a little different?
Yeah, when you look at something like Ethereum, there are points in time where supply growth can actually be deflationary or certainly disinflationary, and it can also be inflationary.
Okay.
And we'll get into why that is, and the burn mechanism and some of the economics around Ethereum. But outside of that, no, that's what makes Bitcoin special.
Okay.
Is really the 21 million
Limited supply.
exactly
Scarcity.
these halving events, and then everything else that goes into it in terms of why we think this is compelling technology.
Got it. Okay, I just wanted to
So yeah,
see
so
if
that's
there was an apples to apples comparison, or if it was the same
Kind
across the
of.
board, or if there are nuances, which there are.
there definitely are nuances, and again, this is why Bitcoin is where you really want to start, and I think makes more sense to a lot of new investors to this space from that investment perspective.
Right.
So all that said, I want to look at how it's done, because people will talk about this as being a very volatile store of value, or not a store of value, or a CPI number will come out, and because the price of Bitcoin doesn't correspond directly with whatever the CPI number is on a monthly basis, then, oh, it's not a hedge to inflation. I think over the long term, it clearly is. It is a store of value. It's very volatile. But let's just look at how it's done. So if we just go back to 2014, Bitcoin's been around a lot longer. Its best year, it's been up over 1,300%. Now, that's at a much lower nominal starting point. It's probably going to be hard for something that's $90,000 today to go up 1,300% again.
Of course.
So you got to keep that in mind. It has had very volatile drawdowns. A couple periods of time here where it's been down 70, 60, 50%, but 73% being the worst year. You can see 2014, 2018, 2022. Some of these are very explainable, 22 especially being FTX collapse. Industry collapsed, forced selling. I think the price of Bitcoin bottomed somewhere close to 15,000 after being closer to 60,000 at the top.
Yeah.
So you do have some pretty big drawdowns. But in general, the average return here has been 182%, and the median return's been 61%. It is by far and away one of the best things that you could have invested in. That doesn't mean that it will be going forward, but objectively speaking, it's been a fantastic investment. It has been a hedge. It has been a beneficiary, I think, when you look at how well it's performed during periods of zero interest rate policy, during periods where the Federal Reserve was buying 100 plus billion in treasury bonds and mortgages on a monthly basis. Bitcoin, to an extent, needs those things. That's because it is a hedge against those. And so when you think about it again as something you maybe would want to consider in your portfolio, I believe there's very valid reasons as to why you'd want that. And then on top of it, the numbers kind of speak for themselves.
Right. And I think that's like the biggest part to me is because like, okay, we are on a trading network. We talk about all different types of tradable products and vehicles and things of that nature. And I think like for whatever reason, there's still this like mindset that like you have to only invest in like one thing, right? Like it's just real estate or just stocks or you're just a day trader or whatever that may be. But like, we're not saying put all of your money in Bitcoin.
Not
like
at
we're
all.
just saying it's a diversification tool that as you just said, like the numbers show that has had a positive return, during its existence.
Yeah.
With a couple of years withstanding.
It has this asymmetric return profile. You've seen that on a cycle-to-cycle basis, the magnitude of the returns is muted in some ways over time as a function as well of just a higher price at $90,000 today. It's unlikely to go up 1,000%, though it's gone up 1,000% previously. That said, to your point, we're not advocating everything you've got in it and then hopefully it doesn't draw down 70%. But what I do think is interesting is when you look at the impact that the addition of a certain percentage of Bitcoin in your portfolio has over time. Now, this slide is from June. We did a show on this if anyone wants to reference it, and there's some material on the Tasty Crypto website. But this is going back to June, so obviously a lot's happened since then. But just looking at, you have the traditional 60-40 portfolio, 60% equities, 40% fixed income. And then what happens if you add Bitcoin to it? Is it a positive thing? Is it a negative thing? What's the impact on your portfolio? So 1% allocation doesn't do too much for you here. Over time, certainly this has gone up a bit more than other things, and so it shows up there over longer periods of time. But I think what stands out to me is that 5% allocation. Just having a little bit of this, 5% in a $100,000 portfolio is going to be $5,000. So if you think about it from that way, over time, it's been a huge benefit to have crypto in your portfolio, even though you could have a year where, it's very volatile. Your $5,000 investment in this case is going to draw down. But having this in the portfolio as a long-term position for these specific reasons, it's worked out. And it hasn't been something where that small allocation has blown you up. I mean, if anything, we know that the bond component is what blew up recently, given interest rate policy or changes there. So I wanted to point that out. And I also want to point out that it's not really correlated to anything else. You'll see some positive correlations here, but they're not that strong.
Yeah.
So if we look at the rolling 6 month, yes, at times, for example, right now, the Russell 2000 small cap equities and Bitcoin showing a bit of a correlation.
Sure.
But it's not 0.8, it's not 0.9. It fits in the portfolio as a relatively uncorrelated asset.
Yeah, and just for those people that maybe are newer out there, like at Tasty, we tend to say anything like 0.5 and above or negative 0.5 and below is quote unquote stronger or has some type of like true correlation. And like you're saying, this is only looking at a 6-month window of time, but none of those other than the Russell are, even towing that.
Yeah. Yeah, I think there's a strong argument that, depending on the different timeframes you look at when you run these calculations, you can find periods of time where there's absolutely a positive correlation, a strong positive correlation.
Sure.
We go back to August 5th, all markets were selling off, and Bitcoin was not immune. Volatility picks up, correlations go closer to 1, so you see them strengthen, as we know, and you'll notice that, it was a pretty strong positive correlation. But over longer periods of time, not that much of a correlation when we look at gold even, financial sector, semiconductors. You look at the NASDAQ, you look at the S&P, you could see that the S&P is going up and Bitcoin's going down. Not correlated, but generally speaking, when you again go back to why would you want this in your portfolio? What are its returns? And then is it correlated to other assets? Did everything else just go up at the same time? Well, markets are at all-time highs. But on a month-to-month, day-to-day, week-to-week basis, it's not that correlated.
Yeah. Well, and I think something else that you just kind of mentioned that often happens around those, types of events or, sell-offs or anything that like kind of makes the traditional news where my parents are asking me about it or my family's like, should I look at my 401k today or whatever? At least with this asset class as well, you still have the 24-hour access, which if you are just using a traditional portfolio, of course, like some stocks, have extended hours and things of that nature, but like you're a little more hand-tied in those products than you are in crypto. Am I correct?
Yeah. Oh, you can, this is a source of liquidity, I think, and is one reason why you see this move first over the weekend. We saw that going back to August 5th, the sell-off in crypto started on Sunday night, and then we saw that spill over into markets once trading started on Monday. But yeah, it's much more liquid in that sense that it's trading 24/7 those markets never close, and it's global in nature.
Right.
And so if you get back to this idea that it's not just the U.S. that's maybe debasing its currency, but that most indebted sovereign nations are faced with pretty much the same scenario, and this is a digital global asset, I think it's pretty compelling. At the same time, it's relatively small. One of the reasons why I think you see some of the volatility in here that most of the time happens to the upside is because of how small this asset class actually is, relatively speaking. And it also has a limited supply. Sure, there's a limited number of Apple shares, but they can create more.
Yeah, they can split them. They can do whatever.
Bitcoin can't happen. The current market cap is 1.8 trillion, so this is out of date, 1.4 trillion. But this just gives you some sense, even going back to the gold analogy, if gold's estimated market cap is 12 trillion, 10 trillion even, we're not anywhere near half of that.
Yeah.
So I think there's some room for Bitcoin to grow if in fact this is what compels people to invest in it, because this dynamic exists from a monetary and fiscal policy perspective, which I think is only going to continue. And when you look at adoption, it's compounded annually at about 12% per year right now. We're not quite at 1 billion users. We're growing pretty quickly. But I'm just looking at addresses with a non-zero balance and how those have continued to pick up over time as just one proxy for adoption here. So relatively small asset class, driven by, I think, a lot of valid reasons here when you think of it as digital gold, and still relatively early, even though it's been around for a while. Why would I invest in Bitcoin? Well, again, it gets back to, do you believe there's a place in your portfolio for something that's uncorrelated, has this upside volatility that acts as a hedge in many ways to a lot of what we're seeing from, a monetary and fiscal policy standpoint?
Yeah, I think this is like helpful to see. And I think like the thing that I'm taking away from this, and I know we're butting up against time here, but the thing I'm taking away is that like when you say investment, you have to remind yourself that it's an investment.
Yes.
Because there is a connotation, especially now with 0-day options and, just YOLOing out of the money options and things of that nature, where a lot of people out there have this like instant pain, instant gain mentality. And to me, like crypto almost acts like one of those like pharma stocks that does nothing, boom, cancer breakthrough or something like that, right? Where you don't want to necessarily bank on that, and you have to realize that you are literally making an investment and that this is not just like a one-year play.
Exactly. Yeah, my argument here is more around including this in your portfolio, a small percentage of it, because I think there's, again, a lot of valid reasons as to why this should benefit from the policy backdrop. The biggest risk to Bitcoin is probably we get everything in order and no longer run these massive deficits and aren't spending all this money.
Yeah, not holding my breath.
Right, I don't think that changes anytime soon. And so if we continue to see central bank balance sheet expansion, we continue to see this sort of monetary policy approach, then I think you're likely to see, it doesn't mean that it's going to be $90,000 or $100,000, but I think that this does well over time. I think gold does well over time. I think assets do well over time, and this one happens to have a very interesting return profile.
Yeah.
So
this was super helpful.
Awesome. Well, I'm glad that we were able to get through all of the kind of reasons as to why I think this is a compelling investment. Again, it has to do with the features that we talked about in episode 1. So if you didn't see that, make sure to go and watch that or rewatch it as we talk about what makes this technology interesting, both Bitcoin, Big B, the network, the value transfer mechanism, and then little b, the cryptocurrency that you can purchase or invest in here that's had a, pretty decent return over the years. With that said, if you have any questions, and I challenge you, Katie, to come back on Wednesday, any more questions you have as you digest this, we'll cover those. What we're going to do on Wednesday this week is get back to basics as well and walk through how you can use the tastytrade platform to enable crypto and to participate. And then we're going to expand into Ethereum and ultimately get into more of what you can do on chain with DeFi. So all coming soon here in our little mini series. But that's going to do it for today's show. Katie, thanks again for coming on. And let me talk to you a little bit more here about why I think investing in Bitcoin is interesting.
Looking forward to Wednesday.
All right. We'll be back on Wednesday with Where Do I Start Crypto. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.